Hello and welcome to this lecture brought to you by the Institute of Certified Finance Technicians. The name of this lecture is How to Post Transactions to Daybooks. As usual, we'll kick off with the learning objectives, which is split into the aim and the learning outcomes. So the aim of this particular lecture is to enable the learner to post transactions to daybooks. And part and parcel of that is combined with our learning outcomes, which is to enable the learner to select data from source documents to record on daybooks. So we're actually going to look at some examples of source documents and then see what data from those documents we need to transfer into the daybooks of an organization's records. And then we're going to have a look at to enable the learner to select the appropriate daybooks to record data. So as we've seen before, there's a number of daybooks. How do you know what data goes where? And that's part of the process of what we're going to learn in the next video. So just to put things into context, we're going to have a look at the bookkeeping infographic, and we're going to look at the first two sections there. We're going to look at the source documents and the books of original entry, and you should recall that they're also referred to as the books of prime entry. Then at the end of this, you should be able to answer all the questions relating to the microtask that's set. So you need to look at 07 BKL1 posting to daybooks microtask. So you're going to have a look at that at the end, and then you're going to try and see whether you got the answers as compared to the suggested solution. So now what we're going to have to do is move into looking at this subject through a spreadsheet. It's easier to demonstrate in that particular format. So we're going to move over now to a spreadsheet. Okay, so now we're going to be looking at this spreadsheet. Again, we have this infographic that we spoke about previously. We're going to look at source documents first and see how you post them to the books of original entry. So just to remind ourselves what source documents are, because we've seen this definition before as well. Source documents are documents that detail financial and non-financial transactions relating to such matters as sales, purchases of products and or services, and other types of financial transactions such as loans, taxation and capital. And then listed down there are a few examples, and on the following spreadsheets we're going to look at examples of these and discuss what data is contained within them and what needs to be posted to the actual daybooks themselves. So the first one we look at then is in relation to purchase invoices. Here we have an example of three actual separate purchase invoices. In relation to this, the company that we are dealing with is called Trendy Tables, because Trendy Tables is the name written as the customer on each one of these purchase invoices. So Trendy Tables is bought from various different companies. One of them is Property Services Limited, the next one is Tech Limited, the next is Office Supplies Limited. And there's lots of information contained within this. If we just look at this first one here for Property Services, we can see that I have an invoice number which is PSL001. We have the name of the customers, i.e. the customer is the company, let's say, assume we're working for Trendy Tables. The date the transaction took place, the details, what it's for. In this instance here it's for rent, and the value, the monetary value is $450 in this instance. And we can see similar information detailed on the other invoices. So that's what a purchase invoice looks like, and we need to know how to transfer that information over to the daybooks, which we'll look at in a moment. The next source document we'll look at is in relation to sales. So Trendy Tables is the company's books we're looking at. So they've issued out the sales invoice, and their customer is Joe Blogs, and the date was the 20th of Jan. If we look at the detail, we can see that there's a conference table sold to Joe Blogs for $2,750. So that's all the information we have in relation to sales invoices. So we go on to the next one. The bank statement of Trendy Tables. So this is pretty straightforward. We have a document either in hard copy format or on soft copy on the computer. It'll detail the same information. It'll have the name of the bank account, the account number, all the various details we need. But for our purposes, we're just going to look at the date of the transaction, the details relating to it, the money's either going into the bank account or out of the bank account, and we have a running balance as well. So at the beginning of January, we can see from this bank statement, there was no money in the account. Then on the 2nd of Jan, a lodgement was made, which was referred to as capital introduced. So that's monies introduced by the owners of the business for 1,000. And then this brings up the balance up to 1,000, because 0 plus 1,000 is 1,000. It's pretty straightforward. On the 5th of Jan, the business received a loan, and the loan was for the value of 4,000. This is adding to the amount of cash available for the business to spend. Now there's 5,000 in the account to spend. On the 6th of Jan, we have an EFT, and we note that EFT stands for Electronic Funds Transfer to Tech Limited for 3,600. If you think back to the invoices we had on the previous screen, there was an invoice for that value. So obviously a payment has been issued during the month. On the 31st of January, we have another payment, electronic funds transfer to the Property Service Limited for 450. And you may recall that was for the rent. And if we take 3,600 and 450 of the 5,000, we'll end up with a closing balance of 950. So that's all we really need to know about the bank statement for the moment. Next one up, we're going to look at petty cash. And here we have an example of 2 vouchers. They're called petty cash vouchers. And in the first one we can see over here, there was monies lodged in, and it says lodge personal cash into petty cash. So that's where the owner of a business puts in a sum of money into the petty cash tin to be spent on miscellaneous items. So on the 15th of Jan, the amount of money pumped in was 300. Then on the 22nd of Jan, some money was spent in order to pay for ink, perhaps for an inkjet cartridge printer in the office, and the amount was for 50. And you can see there's also sequential numbers. So 005 is this one, 006, and that might help us reference things back at a later date if we need to. Okay, so now we've looked at the source documents, we can start taking the information from these source documents to the books of original entry. And we've mentioned before that the books of original entry comprise of these 7 items here: the sales day book, the sales returns day book, the purchases day book, the purchase returns day book, the petty cash book, the cash book, and the general journal. So the next part of the process, now that we're familiar with the actual source documents themselves, is to take that information and transfer it over onto the actual day books themselves. And that's what we're going to look at next. So now we have our 3 purchase invoices that we looked at previously, and all we need to do is take the relevant information and post it to the relevant day book. In this instance, the purchase invoices need to go to the purchases day book, and as you can see, we have a purchase day book template laid out here at the bottom of the screen, and it has a basic information that it's going to capture, and that's going to be involved the date, capturing the date of the invoice, the name of the supplier, the invoice number that's noted on the actual purchase invoice itself, and we can also add a description because that might be helpful in future referencing points, and the monetary value of the particular invoice. Now, in order to make this a simpler, quicker, and less prone to typo errors process, what I'm going to do is I'm going to use a very simple feature on the spreadsheet using the equal sign. So when I need to take the information, I'm going to take it from this particular invoice, any one of these particular invoices, and populate the information down here, the data down here. So I'm going to just use the equals function. So I'm going to click on, let's say, this cell here, A20. I need to get the date of the first invoice. I'm going to take them in the order, date order in which we would have received them. And if I just click on the equals button and just click on the date of the invoice and hit enter, the date was actually just going to populate into the correct column there. So it saves me having to type that in. So the same with the supplier. I can just take the supplier name by hitting equals and clicking on this cell up here, and as you can see, it just populates into the supplier detail part of the purchase day book. The invoice number, I just need to take that piece of information also from the invoice here from Property Services Limited, and that is PSL001, so that goes in. I could put down the description relating back to this invoice. So again, I just hit the equal sign and I click on whatever the details were, which is rent. And then the last thing I need is the monetary value. So I click on equals, hit on the amount, and there we have the first invoice has now been posted to the purchase daybook. And that's all it is. Now, if you're using actual physical real copies of the purchase invoices, you're going to have to type that information in. I'm just using this to speed up the process so you don't have to watch me laboriously type in information from the source documents. But I will continue on and finish off the rest of this purchases daybook because it's important for you to know how to do it. So the next one up we're going to look at is the second invoice, and the date on that is the 6th of January, which is grand. And then we're going to look at the name of the supplier, which is Tech Limited. So that just goes in there. I need to look for the invoice number. So again, I just hit on equals, I take the invoice number, and it will populate straight in. Last couple of things I need to do is I need to identify what was this purchase invoice for. I look at the description on the invoice and it says one computer. So I just click on equals and hit enter, and in that goes. Last thing I need is the monetary value of the invoice, which is 3,600. And there we have it. So now I have entered this invoice here from Property Service Limited and Tech Limited. So you can see what an easy process this is. It could be a little bit laborious if you had lots to do and you're using a manual system, but you still have to type a lot of information in, even onto basic accounting software. But for you, it's important to know how to do this from start to finish in a manual context. So we finish off the last one, which is we just need to get the date of the particular invoice. So it's the 15th of January, as we can see there. The name of the company who supplied it is Office Supplies Limited. So I just take that information there. And I just need the invoice. Click on the invoice number. So there we go there. And what was it for? I look under details, and it is for a one conference table. And then I have the value of that as well, which is noted on the invoice. So there I have all the information I require for the daybook. That's all I need to do with that. If I wanted, I could total that up and see what it comes to. If that was the end of the month and there were only transactions, that's essentially what I would do. So that is posting purchase invoices to the purchases daybook. So the next daybook we're going to look at is the sales daybook. And for this example, we're going to just take a look at one source document, one sales invoice, and transfer the data from that into the sales daybook. Now, as you can see on the screen here, we have a template for a sales daybook. It has basic information. It has the date of the transaction. It has a space for the customer to be detailed, a space for the invoice number to be noted, and also a description of the product or services that were supplied to the customer to be noted. And then finally, it has the amount section. So we just need to take this information, and I'm going to take it the same way as I did the previous example, just using the equal sign because it's quicker. So the date of this particular invoice, I just need to look at this invoice here, and I note it was on the 20th of Jan that these products were sold to the customer. And the customer's name is Joe Blogs. So I just need to take that information from the invoice, Joe Blogs. And we just key it in there. And I need to look for the invoice number. So the invoice number is JB001. That goes in there. And the last two things to look for, the first one is description. What is it? What did we sell to this customer, Joe Blogs? It was a conference table. That goes in there. And for how much did we sell it to them for? It was 2,750. So I'll just take that information there. So that is a very simple sales daybook. Again, the greater the volume of transactions that your organization engages in, the more transactions it will have in the sales daybook. Now, some organizations might have hundreds, some might have thousands, some might have hundreds of thousands of transactions in the sales daybook. Some may have very few. It just depends on the type of business or organization in which you're operating. So that is the sales daybook. This could also be totaled up if this was all the sales for a particular month to give us an overall figure for sales from the sales daybook perspective. And that's all we need to do concerning sales daybook. The next thing we need to move on to is in relation to petty cash. So let's have a look at this. The petty cash book, petty cash daybook. Here we have an example where we've got two slips, two petty cash vouchers, they're sometimes referred to as, and we're going to take the information from these two vouchers and populate it into the petty cash book. And the petty cash book template is written on the screen here, as you can see. I'm just circling now. So in the petty cash book, we have it split into money in, receipts, and money out, payments. Pretty basic. Money in would be monies from any source that's being allocated towards petty cash, and then every time money is spent, we're going to put in the details of the transaction on this side of the petty cash daybook. So let's have a look at our vouchers or our petty cash slips. On this one here on 005, we can see that there was money lodged. It says lodge personal cash into petty cash. That might be the business owner putting some monies in on the 15th of Jan for 300. Okay, so we can have a look at this. We can just key in the detail as we did previously. So the date would be 15th of Jan. The detail can be lodged personal cash in. That's fair enough. Reference, I might want to reference that petty cash slip number. That might help me. And then I might have the amount in there as well. Not might have, will have. So this means that from the 15th of January onwards, if there was no other cash available in petty cash, that's the amount of money available to spend. So there's only one transaction that monies was spent on in this particular period. And we can see that if I take the information from this petty cash slip number here on the 22nd of Jan, this is when the transaction occurred. The detail was cash paid for ink. So we're assuming that is cash for inkjet printer or whatever the case may be. The reference, will take the reference number of the petty cash slip number, which is there. And then we can have a look at the monetary value and populate that in as well. So now, if these were the only two transactions in relation to this period, we can see that 300 came in, 50 went out, and there was no opening balance. That means there's 250 available for the next period. And that's all we need to do for the petty cash. You may at some stage in the future, when we get into more detail, look at analyzing out the payment side of it. So that's something we can look at into the future. But here, we're just trying to keep it very, very simple. So that's the petty cash book. Now, we want to move on to the next item on the agenda, which is the bank day book. So it's the cash book. It's called the cash book, okay? So cash book, cash day book, we take the information from the bank statement. Now, there's quite a lot of information here. I'm going to just go through this literally line by line, move that out there so we can see. So there's a template here for the cash book, similar to the petty cash book, but these are for larger amounts of money, and it's not necessarily cash that's being moved in and out. So we have monies coming in and monies going out. Again, as we progress and we get more advanced, we're going to analyze these transactions out in more detail. But for the moment, we're just going to take the information from the bank statement and populate it into the cash day book. So let's have a look at this. On the receipt side, we have two transactions that's telling me that's money's coming in, and those are those two transactions there. So I'm just going to take the information straight from the bank statement. So the date is the 2nd of Jan, and the detail of that relates to a lodgement, and it says capital introduced. Again, that's monies that has been lodged by the owners of the business. Reference, I might have a reference slip number there if I need it. I don't have one at this instance, so I'm not that concerned. And then the monetary value is 1,000. That's my first transaction on the money inside. Next one up happens to be on the following transaction. So on the 5th of Jan, we have monies coming in by way of a loan. So the business has borrowed some money from a third party, which is a liability, and the value of that is for 4,000. Now we might have more detail there as a reference as to where that originated from or whatever the case may be. In this instance, we don't have it, so we're not that concerned. Last number of transactions then as money leaving the bank account. So the first one that's leaving the bank account is on the 6th of June. So we just take the 6th of June there. And the detail is an electronic funds transfer payment to Tech Limited. And the value of that is 3,600. Now I could do something like where in reference there I could put in EFT if I wanted to, just so I have a reference on it. That's okay. Next one is on the 31st of Jan, just taking the figure straight from the bank statement. 31st of Jan, take some detail there. It's a payment out to Property Services Limited. And if you think back, just put EFT in there as well for reference. If you think back to the purchase invoices we looked at, those invoices were generated and recorded and put in the purchase day book. Now the bank is shown that those were actually paid during the period. So the last thing I need to put in there is the value. And there we go. So now the payments have been recorded and the receipts have been recorded in the cash book. Now, if we were to analyze that out, we could have a separate column out for payments to suppliers, payments to other third parties, non-trade suppliers. We can analyze out payments that were for certain types of expenditure, but that's all in the future. We're going to get to that at a later point in the training syllabus. So that's the day books done. The micro exercise that you need to have a look at next would be in relation to this one here. So have a look at 07 BKL1 posting to day books micro task. And basically you're going to be asked to do pretty much just what we've done there. You're going to be given the source documents and you need to populate the day books with the relevant data. Then you need to make sure that you get them all correct. If you don't, you need to figure out why. We have now concluded this lecture. Best of luck with your micro task.